Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Let's take a look what is going on currently on the euro currency. Well, as you can see, yesterday market has shown the price action that we be aware of. And as we said on the previous research, we said one thing that we do not want to see is the solid plunge to the downside. Fast acceleration that is not in a row with the retracement type of move. That was precisely in that way. So you can see on the intraday charts, you will see this miserable plunge down right at the open of the US trading session. This was a really significant move. And now we have to decide what we have to do, and should we do anything, or is better to take some pause and wait for some more clarity from the price action. Let's take a look at the daily time frame first. You can see that market has moved down from the significant area of resistance. As we said, it's not the time to enter long on the daily time frame, right below the monthly pivot resistance 1. And that is also the border of the monthly conference resistance. And market has shown really significant moves down. Another thing that we have to take into consideration is the weekly pivot point. Weekly pivot point hasn't been tested within the current week yet till the yesterday's trading session. So you can see market has shown the move down right to the weekly pivot point. So where we are now, that is the weekly pivot point, and you see daily conference support. It's 129.50, 129.75 area. So theoretically, our assumption about the weekly stop grabber pattern still holds, since you can see, as we said, since this low, until this low will hold, the stop grabber pattern will be in play, and market currently still hasn't erased this area. Right above this area stands the weekly pivot support one, it's 129, and monthly pivot point that also hasn't been tested yet within the current month. What is more significant currently is approaching of the price action right to the MACD predictor. So one thing could happen here. So if market will form the stop grabber, and I like the stop grabbers like in this way, so I prefer when the market for instance shows this thrust, and by this such sort of the retracement shows the stop grabbers. So when the stop grabbers appear in the direction of the previous thrust. So you can see the thrust, now market retraced to this line, and if we will see some candles that could be also multiple stop grabbers side by side, that is also very often happens, that will be just perfect for our weekly scenario, and that really could drive the market above these highs, and probably could lead to finally to the reaching of the target that we have specified in our weekly research. So I think that we have not done yet with this weekly pattern, at least until this low holds. How it could happen beyond the stop grabber? Well, I can't exclude that market could form, for instance, some sort of the butterfly in this area with a bit later acceleration to the upside. That's also possible. If market will break this area to the downside and taken out of this low, then probably we will have to say goodbye to our plan and expectation of further upward continuation, at least in the nearest time. What will happen later? It's difficult to say, but shifting trend on the bearish side and moving below both pivot points, below this low, will probably tell us that in the nearest future we can't expect further upward continuation. That it will be also significant, especially because market has stopped in this area right below the previous swing high on the daily time frame without any attempt to clear out the stops right above the highs, even without the Russian range. That will be really bearish moment. But currently we still have some moments to watch for. First of all, this is how market will behave around the MACD predictor. Will be some stop grabbers formed in this area or not, and how market will respond with this confidence support. So market, for instance, could just test weekly pivot point, forming some upward continuation pattern, for instance, butterfly, or something like that. That, I suppose, what we have to monitor in the nearest time. What we could see on the 4-hour time frame. On the 4-hour time frame, just a couple of words. First of all, we also have an agreement with this area. Recall yesterday's ABCD pattern that we expect to be gradual, but you can see that CD leg was just absolutely explosive to the downside. And market currently stands at the 1618 extension of that ABCD pattern, although it's very shallow on the 4-hour time frame, but it could be better looking on the intraday charts, lower time frames, maybe on the 13-minute chart, on the 15-minute chart. Well, so we have currently the nice support area, daily confluence support, ABCD target that creates an agreement, and weekly pivot point. That's significant. Another moment to discuss is that area is the 127 extension of that pattern on the hourly time frame. A, B, C bottom. We have discussed it a couple of days ago. And in fact, market could show the pullback after the hitting of the 127 extension right to the 618 support of the most recent leg. That is possible. But sometimes it could happen that market will proceed high to the 1618. That's also possible. But one thing that worries me is this real significant and strong bars right to the downside. That not just a retracement move. That makes this expectation of the further upward continuation, at least in the today's trading session, a bit blur and put it under question. Although theoretically this is possible when the market shows the 127 after hitting the 127 target, deep retracement, further acceleration to the upside after that. But in current circumstances, I suppose that the probability of this is not very great. Well, on the hourly time frame, I just could say a couple of words about yesterday's hour trading plan. So, as you remember, we have started with this ABCD pattern potential. And we said if market will form any pattern, we could stick with it, try to enter on the long side of the market. Here I just want to show you why getting the pattern on your side is very significant. And it could put you out from a lot of unpleasant moments if you are taking the wrong position. For instance, you can see this nice butterfly that I have monitored yesterday. And that could lead to the reverse head and shoulders. I have the post on the in our forum with this chart before this plunge has happened. So that was developed as nice reverse head and shoulders pattern, and that probably could be the pattern that could suggest the upward continuation as we suggested. So if you entered long with the same pattern on your side, for instance, this nice 1618 butterfly buy, you have the probability on your side, because in the most cases the market will respect the pattern. Even with the shallow retracement, even when the 3.8 pullback from the reversal point of the butterfly, that will be enough to put your stop to the break-even. So if you will be even wrong miserably as I did yesterday, as you can see, you have the time to put your stop to the break-even, because in the beginning of that move all was really nice. So that was start move by this butterfly, that was 3.8 retracement. After this swing, that was just nice. But later you can see what has happened. So when you put your stop to the break-even, if you will be even miserably wrong, you will be able to exit from the wrong trade without no loss. Any patterns could be suitable for that, not always. It could be the godless patterns, harmonic patterns. It could be just the candlestick patterns. If you like the candlestick, that's great. You could use it. It's also nice assistance. Also, that could be the classical patterns. for instance, as the head and shoulders, wedges, flags, pennants, and others. So always try to get your some pattern on your side that will let you to understand where you're wrong and where you can move your stop, and that will also give you the probability on your side. That will be your chance to protect your position with the break-even stop. On the hourly time frame, in fact, I do not see nothing. I see nothing currently. So you can see that market has passed through our confidence support area without any respect, as it were no exist here. Okay, so now we see some sort of the bearish pennant is forming right around the strong daily support. So personally, I do not intend to make any trades currently on the hourly time frame. If you're a scalp trader, maybe you will find some possibility to make the scalp buy trade from the confidence support, just for a bounce a bit to the upside as the respect of the support area. But personally, I do not want to do that. So that's been said, what we could see and what our trading plan. First of all, is to keep an eye on the MACD predictor on the daily time frame, and to monitor overall situation, how market will behave in this confidence support, and we'll hope that this swing low will hold, and our scenario for our hope for the potential upward continuation will survive at least for some time. That's probably all that we could do currently, because no patterns I see now on the 4-hour time frame, no patterns except maybe this pennant, as I said, on the daily time frame. That's not sufficient for us for any beyond the double repo pattern, so nothing I can see here. Maybe on the daily time frame on the next week we will see some butterfly to the upside. Well, that's also possible. But today's non-farm payrolls release, and currently market has shown really significant moves to the downside. I think I still will take the pause and we'll try to get some patterns on some side of the market before taking any action. I hope that that will be nice if we will get some stop grabber, bullish stop grabber on the daily time frame. That's the way that we have to look on the daily time frame. Still trends, as you can see, still bullish here. It's still possible the upward continuation, we can't exclude it totally. But I suppose that currently it's not the time to take the active trading, especially on the long side of the market, although we stand at a significant support. So that's all for today. We will try to get some more in-depth view on the market in our weekly research. Maybe we will find something more interesting on the higher time frames that will give us more assistance and clear understanding on the current situation.